right. Well, welcome to the 26th episode of the Kansas City Commercial Real Estate Market Pulse, sponsored by Midwest Commercial Real Estate Advisors. Look, I know that we said we're going to have some guests on, and I promise you tomorrow we will have a guest on outside of our team, but we have been very busy in regards to bringing new projects to the market. And so we've had a lot of deal spotlights, and we've got another one here today. This project, the Riverbend Garage project, has been getting just a ton of attention, and we're going to talk about why. And it's really serving a niche market that is underserved, not just in Kansas City, but nationwide. There's a huge trend of onshoring and need for smaller bay industrial projects in the city and on a national landscape. We got a lot of data to cover on that as well, but I want to first just reintroduce Nathan Roberts. We've been super busy on bringing projects to the market. Nathan, how you doing today, man?
I'm doing pretty well. Yeah, majority of my morning has been spent doing some prospecting, in particular regarding this property that we're about to discuss and a few other deals that we're working on. So it's off to a great start, and got a lot more work to do to finish the day.
Absolutely. Well, here's our team: Katie, Micah, Nathan, Chad, Nick, and myself. We can help you in regards to any of your commercial real estate needs, all the way from land, which we're going to be talking about today with development potential, to stabilized office, retail, industrial, multifamily projects. We have value add deals that we can get in front of you. We're working on a number of 1031 exchanges right now as well. I mean, together, our team is really dedicated to delivering top-notch service and results. And we're bringing market intelligence and collaborative approach to every single client we serve. We've been talking about this spotlight strategy for quite some time. What is the spotlight strategy? Well, it just simply is looking at real estate as a very specific productized launch instead of just listing real estate. We have to know the story. We have to understand the fundamentals. We have to then go create a market for that property and find the right buyer. And so we're looking forward to sharing all of our insights with you today on another deal spotlight. But if you have any needs in the commercial real estate market here in Kansas City, do not hesitate to reach out to us. Chad is working on a lot of medical office type of property. Nick is working on a lot of build to suit and development opportunities, specifically on the land side as well in the industrial space. So very excited to continue the momentum that we have as our team here. And I just was in a meeting with a very respected commercial real estate and real estate practitioner, and he was saying how busy he is right now, and that there's a lot of buyers and there's a lot of developers in the market, and there's deals that are trading if they make sense. And we've been working on that. We've got more than 6 or 7 projects either under contract or in the listing phase and pre-launch phase that we're working on as well. So we're seeing a lot of market momentum. I think people are starting to really grasp the idea that interest rates are where they are, and that's where they're going to be. So how do we make that work? Obviously, there's been some legislation here recently that has passed that is a big tailwind for commercial real estate in regards to taxes and other benefits like opportunity zones that developers and investors are starting to take note of. But we have been really busy on the Kansas City Commercial Real Estate Market Pulse, aiming to deliver valuable and up-to-date information on the commercial real estate market, which is including our current listings, any market trends, one that we're going to be talking about today. We're going to give you transaction overviews, and we're going to be bringing on experts on a regular basis to help you make more informed decisions. So today, I'm excited to jump in to one of our most recent projects. Let me get this shared. I'm going to pass the baton over to Nathan here so he can go through this project. But man, I'll tell you what, the flex industrial space is one that has just been absolutely booming, not just here in Kansas City, but nationally as well. So Nathan, why don't you kind of give us an overview of the project here that we're talking about, Riverbend Flex Garage over in Bonner Springs.
Yeah, so Riverbend Flex Garage, it's about 6.5 acres of land, about 4.5 acres of actual usable land that has been zoned for light industrial use. We've already taken, or the developer, the seller has taken these plans to the city and they have been approved. These are mostly architectural plans, but as far as getting the full set MVP plans, that should be pretty easy, just knowing that the use has been approved by the city.
Yeah, no, absolutely. Again, I passed over this. If there are more questions, please do reach out to us. I'm active right now on LinkedIn, on YouTube. We're monitoring both channels so that we can get all of the questions. Thank you for everyone who pre-sent all of the questions that you had on this project. We're going to be covering those there at the end. I think many of those questions will be covered in this presentation, but we got 48,000 square feet on 6 acres, fully permitted site with the site plan approval. You've got your plans, you've got your engineering, the entitlements package is in place. I mean, man, this is pretty well shovel ready, right?
It is. Yeah. Not much to do besides buy the property, and then obviously you have some of the hard costs associated with the build out.
Absolutely. Well, let's get to the investment highlights.
Yeah, so as we mentioned, we have the complete entitlement plans. It's a prime development site, just knowing where it's located, very close to near like K7 Highway. It has they're approved site plans, as we mentioned, strong market and demographics for that area in particular. I mean, if you all have been following flex trends around the nation, I mean, there's still a huge disconnect between what is needed as far as the demand and what is actually being built out there. There's not much inventory out there on the market, which is why there's virtually 0% vacancy. And that's why this is a great investment for a developer coming in that wants to do this development and actually lease it out to a wide variety of different tenant bases.
Absolutely. This is offered at $1.15 million, so $1,150,000. And we'll cover everything that comes with, but this is a pretty good overview of what you're going to get, right? You've got an approved site plan. You've got a full pro forma that is built out by the industry's best experts. You've got a strong target market. We've got comps to be able to showcase to you on similar type projects across the metro area. And you have the ability, and we're going to get into this, you have the ability for some additional parking, and or if you decide, you can build some more buildings. So very, very cool. Now, Nathan, let's talk about what is flex, right? So like, what are we actually talking about here? Is it flex? Is it contractor garages or office condos where, industrial condos? There's been a lot of talk and a lot of different terminology. So let's just talk through kind of what's been designed for this site.
Yeah, so what's been designed is true flex garage space or contractor garages. Typically, I would say the best way to think about it for a contractor space would be it's kind of like a storage unit that's a lot larger for you to store items in it or operate it as a workshop or something along those lines. True flex is a little bit different. Contractor garages is just a subcategory of the flex flex space category of commercial real estate. So
yeah, and the way that this is designed right now is across 4 buildings, right? So you have 1,000 square foot units, you have 48,000 square feet total, which is on the site plan, which we'll see here in a moment. So that's 48,000 square feet across 4 buildings. So you got 12 units per building right now at 1,000 square feet. So and we've got some great, visuals that we'll show you here in a second. But before we do that, I want to get into, and here's a good overview of kind of the site aerial and the location. You can see that additional parking there as well. But want to kind of walk through, Nathan, like what type of users would be coming to this site. And what are they going to be doing there? Because I think that's a big determination of the investors, target profile of who they're trying to get for renters on this site. And I think this picture does a great job as you described that.
Yeah. So, as you mentioned, with this being called contractor garage spaces, it's going to be great for contractors. So it could be, let's just say it's a property manager that just wants to utilize a space to store items. It could be someone dealing with HVAC. They want to store some of their equipment there, or they might have an office that's built out in the space. They're working in there, and then they mostly use as storage, or someone that wants a space that they can work on their different projects.
Absolutely. And as you can see on this layout here, we've got the 4 buildings. So you got your entrance and the 4 buildings. right there. And then on the back side, you can kind of see where that additional parking is. And you have some ability to, if the absorption really is strong in this market and you have your 48,000 square feet leased up, and you believe that having more buildings there would make more sense, you have the ability to add some more buildings to this project. So prime location, we've talked about that. It's got a strategic advantage. This is located within the Bonner Springs Industrial Park, right between Coleman Equipment and is it Grass Pad, which is a large landscaping company. And then down the street in the industrial park is actually an Amazon distribution warehouse as well. And so there's a lot of nice benefits being inside of this industrial park. Okay, so let's talk about a little bit of the design, right? So walk us through the building exteriors and the renderings here.
Yeah, so for the most part, with contractor garages, you're going to have 12 by 12 or 12 by 14 size bay doors. You're going to have like some sort of access to enter through a side door. And that's pretty much it. Now, you can change some of the facade designs and remove some of that, the door, and put glass. But this is typically what we've seen is in the most demand, is having those big 12 by 12 garages and then a door on the side.
Yeah.
Obviously, this isn't built to be for retail. Can you have signage on the exterior of the building? Yes, that is an opportunity for some of the tenants. But this is typically the design that's more efficient to try to maximize value for a developer coming in.
Yeah, I mean, on the facade, inputs here, you've got contemporary materials. We've got some stone accents that you'll see. We've got a nice, modern, attractive exterior aesthetic. On the functional side, you got individual overhead garage doors, and you got your separate pedestrian entrances. And obviously, we've got metal buildings here, right? I mean, they're high quality metal buildings. You're going to have your premium finishes throughout. In regards to, bathrooms and things like that, Nathan, talk to everyone about what type of amenities that this efficient build actually brings to the table.
Yeah, so you're going to have shared amenities. So you're going to have a shared conference room, a shared little office space. If you just want to meet clients there, you're going to have shared restrooms. So that's all going to be located in one section of the building.
Absolutely. All right, let's get to some more of these renderings in regards to what this can look like. So I think a lot of questions come, along the lines of how do you think about the drive aisle, right? I mean, this is wide enough for easy vehicle maneuvering. You've got, your clear sight lines for your safety and your access. Again, you got contemporary buildings, spacious units, and you've got direct vehicle access to each unit. If you need to have additional parking for this specific project, we do have the ability to, have that be rented out and leased to some of these businesses and or other folks, right? And I think that's a really cool thing. I love the flex space because flex means, look, I mean, you have the ability to, phase this development out as well, right? I mean, you can see, you can build 2 units and kind of see how it goes. How long does it take to absorb? You can build the other 2 buildings. And if that goes really well, you have the ability to remove that parking and add some additional buildings here. So that's a great rendering. Here's one that I really like. It's kind of this premium end cap design, right? I mean, it's got the stone accent walls, which really creates that visual, interest. We got some wood elements to enhance that architectural appeal. Nathan, you already mentioned in regards to the signage opportunities, right? This could be a very good spot for some signage opportunity. This is high visibility, and you got your nice modern finishes and professionally landscaped entrance. So it's just going to look nice when you show up, right? I mean, it's going to look a little different than a storage facility because this is not, to me, driving into this does not look like a storage facility.
No, exactly. I mean, with any sort of design of a building like this, you definitely want it to be aesthetically pleasing for any sort of customer base that's coming in. Like I did the comparison of this being compared to a larger storage unit, but the fact is these are businesses that are occupying out of these spaces. They're working in there, and they wanted to be aesthetically pleasing for their employees. It's not a situation where you're going to leave your store items there and then you're gone and you don't come back for the next 30 days. These are people coming to work each day and they're working on projects or grabbing items. Like we said, I mean, it's a variety of different tenants that can go in there. Landscaping companies would be a great fit. Like really the true definition of flex is that it has flexibility for a wide variety of different tenants that can go in there, and just kind of playing around with that configuration as well.
Yeah, absolutely. Here's another view of the properties, right? So it just kind of gives you an idea of the site flow, what the buildings can and should look like. You'll have some flexibility in regards to what you decide to put, but I think the guys that designed this project did a wonderful job looking at this. Here's kind of the full, entrance as you're pulling in to this facility, right? 4 buildings totaling 48,000 square feet. You got optimal site coverage, ample circulation. Keep some nice landscaping integrated in there. The site orientation, you have north-south facing buildings. We got the strategic layout, which maximizes a usable space, right? Okay, so let's go over to the civil site plan. Again, if you are interested in more, learning more and seeing these actual drawings and these renderings, head on over to our listing either on Crexy or LoopNet, or reach out to Nathan and I for this offering memorandum. But there is more information in our due diligence portal online. You have to execute a CA because there's a lot of confidential information in there in regards to the project, but you'll have a full pro forma. You'll have these civil site plans. They have some more information on the construction side of things I think everybody's going to find important. But when looking at this civil site plan, I mean, Nathan, what stands out to you on this?
Really, the biggest thing is just how efficient that layout is. I mean, coming in, I mean, they're trying to utilize the majority of the parcel, and there's still opportunity, like you mentioned earlier, to add additional buildings.
Yeah, I mean, the site layout is really nice. Again, this is ready for permits with site plan approval. It's optimized for the traffic flow. You got about 4.5 acres that's usable. There's a large water line, and there's an easement. That all that information is in the due diligence portal if you would like to take a look at that. But again, all the technical specifications that you're going to need to evaluate this project are available to you. So, I mean, a lot of that front work, many months and lots of money have been spent on getting this project to the point where it is today for you to evaluate. There are small changes that you can make. One being, if you would like to offer, climate control in these units, putting a mini split in some of the units, you can do that. And Nathan and I can support you in regards to thinking through your lease up strategy and how that should be marketed. Pre-leasing is also a really great idea here on this property. So we'll talk about that here in a second. We've talked a lot about the development specifications, so we're not going to spend a whole lot of time on that. What I wanted to get to next was kind of the development costs and pricing, right? So, the asking price for the land, all the entitlements in place, the design architecture work that's been done is about $1,150,000. The group that was working on this project has really good bids from a reputable contractor here locally in Kansas City. Estimated hard costs around $3.9 million. So from a per square foot standpoint, the hard costs are right around $84 per square foot. Okay. You've got 4.5 usable acres. Again, that water line easement is there, which you have the option to build 2 additional buildings or have some space for the parking that you decide to utilize. And the complete designed architectural plans, the engineering documents, and all the due diligence materials are included in the sale. So that gives you an overview kind of the development costs and pricing. Again, if you want more information on that broken down line by line, it is in our listing in the due diligence portion of our listing, so you can go find that. But let's talk through kind of what a 3-year hold analysis looks like. Nathan, why don't you talk just with the kind of lease structure in a typical, contractor garage or industrial small bay project here, and what's been kind of pro forma'd out in the projections?
Yeah, so there's a few different lease structures. I would say primarily with brand new development right now, a lot of it's going towards triple net. I would say in dealing with something that's more contractor garage based, it's most likely going to be full service, just because it's a tenant that might come in. They might only sign a 1 to probably 3-year deal, and typically they want to know their all in costs. The great thing about a full service gross lease structure is that you want to account for what some of those operating expenses are going to be. So that's going to be included in that base rent. So, I mean, you could go a triple net route if you wanted to. Obviously, that base rent's going to be a little bit lower, and you're going to have additional rent charges to the tenant. But I would say for the most part, with contractor garages, it's going to be a full service lease structure, and that's one thing that we try to account for.
Yeah, yeah, absolutely. And talk through kind of the rates, for 1,000 square feet in this project. What do you think is achievable from a rental rate standpoint?
Yeah, so knowing that this is full service, what is achievable is likely going to be around that $14 and $15 a square foot range. We've used a wide variety of different comps out there. It tends to be that majority of the smaller bays that are 1,000 square feet are leasing for a higher price per square foot compared to something that's going to be 1,500 square feet or higher.
Absolutely. And on this 3-year hold analysis, one thing I do want to point out is in the pro forma, you will see on the terminal cap rate an 8% cap rate being utilized, right? Okay, so if the NOI at year 3 is right around $538,000, right? And you use an 8% cap rate, you get to a $6.5 million valuation. But we haven't seen many brand new industrial type properties selling for an 8% cap rate. So if you were to, utilize probably more close to what a market cap rate is, maybe 7.25, maybe even lower, depending on where obviously the stabilization is and where interest rates are, you have a big buffer there in regards to the exit price point that you can achieve. So, but using this conservative approach, you can see that with the land and the entitlements being about $1,150,000, the total project costs being right around $5.8 million, which includes all the contingencies and soft costs broken down line by line in our pro forma. You'll be able to achieve about at an 8% cap rate, a $6.5 million exit price, which if you lever that, your IRR would be right around 26%. And your equity multiple is close to 2, as well as a cash on cash return at 9.61%. So that tells us that there's multiple strategies here on the exit strategy standpoint. You can build this and hold. You can build this, stabilize, and go see where the market is. You can build this and get it stabilized and then look for a refinance into more permanent debt. We love the flexibility on the exit strategies here that allows for these developers and the folks that are looking at this project to have multiple ways to kind of think about doing this deal. So this kind of breaks down more of the project costs, okay? So our cost allocation model here, again, the land and the entitlements being about 19.8% of that at $1.15 million. You got hard costs right around $4 million. We got direct soft costs about $20,000. That's low because a lot of those soft costs have already been incurred, right? A lot of the design, a lot of the engineering, that is ready for you to go. But we did carry a 4.7% indirect soft cost. Maybe there's some, costs in regards to financing and things like that. And then you're going to have a leasing cost depending on your strategy on how to get this leased up. So total project costs somewhere around $5.8 million. And again, that is in our pro forma line by line in a very, very detailed fashion on our listing that we will drop into the chat here soon after we get to all of our questions. Okay, so we kind of talked through maybe the rent roll a bit, but your scheduled base rent can be right around $1.5 million. Okay, so that's building A, B, C, and D. That's all 4 buildings, right? So each one of those brings between $350,000 to $442,000 of annual revenue. Okay, so that's how we get to our base revenue, about $1.5 million. Nathan, what kind of expenses would somebody typically incur with a project like this? We always try to put an operating expense ratio on these deals, but with something like this, it's a little bit different. So let's just talk through maybe some of the expense structure.
Yeah, I would say with the operating expense ratio, it's typically going to be lower for an industrial building compared to something like multifamily, just because it is a lot more operational heavy. Typical expenses, maintenance isn't going to be that heavy. You're not going to have a huge CapEx budget because everything is fairly new. Really, it's going to be the main things like taxes, insurance, and then maintenance things with pavement, things like that. You might want to have flower beds put in or trees. Different things like that, dealing with maintenance, dealing with the property and the land. But outside of that, you're not really going to have much operational costs. You might pay a property manager, but really it's not going to be maintenance intensive at all.
Absolutely. Okay. That sounds like a good plan there in regards to this. I mean, you're going to have some utilities that you got to manage. Obviously,
Yep.
you're going to have turnover, but again, bake it into your leases that people have to bring you the space back the way that it was delivered. Okay. I think that's really, really important to kind of keep in mind. Everybody that's on YouTube watching, we just dropped in the link to the Crexy listing. You can go find it. If you're over on LinkedIn, just head over to my page. It is blasted all over my LinkedIn page on my post today, and we'll drop it in there here shortly as well. All right, so let's keep this moving. Let's go to our cash flow analysis and exit strategy, okay? So thinking about, your operating performance, you got $1.5 million of scheduled base rent. You got about $90,000 worth of concessions and vacancy, right, to get leased up and the vacancy that you're holding. And then operating expenses right around $418,000. Okay, so that's what that looks like in regards to your cash flow analysis. So year one, as you're getting leased up, obviously going to be pretty light. We start to really ramp up in year twos and year three. In regards to the lease up for this, Nathan, what are we seeing in the market? How long do we think it's going to take to be able to get a project of this size leased up and operational?
Yeah, I would say one great thing about any sort of development play is that you have the opportunity to pre-lease before everything is actually built. We like to start marketing the property 6 to 9 months in advance just to make sure that, hey, once day one opens up and you have a unit that's coming available, we already have a lease in place. But I would say for the most part, just going out there, surveying the market, talking to different tenants, I would account for at least 6 months, probably around 6 months in order to get those fully or around 50 to 70% leased.
Okay, excellent. So if we're thinking about that, on a monthly basis, how many do we think, if we got all 48 delivered and it's going to take us about 6 months to get 75% occupied, where we're talking about 4 or 5 spaces, per month, actually it'd be like more like 3 or 4 spaces per month to get this this up to stabilized value.
Yeah. And we're being a little conservative there. I mean, we do believe you can get it leased up faster than that, but that's one thing you definitely want to account for with any sort of development without the land actually being built, like no shovel in the ground yet. It's very hard to get tenants on pace with actually signing a lease until they see that there's some work being done on the parcel or the land.
Yeah, and in regards to the leasing strategy, if you have questions around how we would approach this leasing strategy, please do reach out to Nathan or myself. We're working on leasing this up, many other projects up like this, and we have a smart leasing strategy that we're utilizing to do so. So we have lots of information on that as well. All right, well, let's talk just about the market, right? So in regards to, Bonner Springs, Kansas City industrial, what's been going on in Kansas City's industrial, the absorption rates, the investment activity? What are you seeing, man? I mean, you're out there. We've got multiple small bay industrial projects going right now. Talk to us just from a narrative and anecdotal standpoint on kind of the demand that you're seeing out there.
Yeah, and I would say high level, when we're speaking about industrial, you definitely want to try to segment flex away from industrial.
Yeah.
Typically with industrial, I mean, that's what's been mostly being built here in Kansas City, large-scale tilt-up projects. With the flex space, those are being built as well, but those are being absorbed a lot faster than those large 250, 500,000 square foot spaces. So as far as the absorption, I mean, comparing that to vacancy, I mean, it's virtually 0%.
Yeah.
When it comes to the flex side. On the industrial side, you're kind of around that 6% range. And that has came down significantly just over the past 24 months.
Absolutely. Yeah. And if you're not familiar with Kansas City, our metro population is right around 2.2 million people. We have above market nationally job growth at 3.2%. The median income in this area is right around $76,000. Well, that is for Kansas City. Bonner Springs is quite a bit higher, actually. The industrial vacancy standpoint, right at 4.7%. So every demographic marker or demand driver that developers are looking for, Kansas City is usually hitting on that. In regards to Bonner Springs, you'll see here that the income profile is quite a bit higher than Kansas City metros. This is in Johnson County, Kansas. and it's right around $82,000 on the household income. And that was from 2019 to 2023. It's projected to rise to about to $95,000 by 2029. So in the next 4 to 5 years, that's projected to jump around $14,000 on the median household income. Why is that important for a contractor garage project, Nathan?
Yeah, I mean that's primarily important because typically as that income, the average income tends to go up, you start seeing more businesses moving into the area. And the great thing about contractor garages is that majority of the tenants that are moving in are for the residents of the community that's surrounding.
Absolutely. So we're definitely in the growth phase here. Stable population, household and income growth indicators with positive, expansion in the projected future. That's only going to create more tenant demand, right? And that's going to create strong demand from the trades, from contractors, from home service providers seeking that flexible, secure kind of industrial space that this project is going to provide. All right, so we have across the metro area some really great comparable sales and or comparable rental projects to kind of look for. And this is one that's over in Olathe. They had 32 units and it was leased up within 6 months. The monthly rent's right around $1,300 per 1,000 square feet. So that obviously is showing strong demand, which is demonstrated through rapid lease up velocity. I mean, 50% occupied within the first 75 days, right? So we have comparable demographics and accessibility that are going to support similar performance here at Riverbend. Additionally, have that nice highway access as well as a diverse tenant mix is going to validate kind of multi-sector demand for this product type. So this kind of gives you a nice view of what that lease up velocity can kind of look like, right? So from month one to month 6, we're thinking that we can just from this project, they were able to get, 32 units leased up in this Olathe market. Any other thoughts here on the comp analysis, Nathan?
No other thoughts. I mean, obviously, if you were to reach out to us, then we can provide a breakdown of what those other comps are. Obviously, we'll include the addresses, square footage. You'll be able to see the lease rates, and that's a great way of just comparing the market and seeing where that demand is and how we can actually help you with leasing this up if you go that route.
Yeah, and don't forget, this is in an industrial park.
Yeah.
Sandwiched between Coleman Equipment, grass pad, great highway access, and an Amazon distribution facility. So I always like to say, if Amazon picked the location for their industrial, it's probably a good spot to think about for a smaller industrial project, right? So utilize their data analysis that they use to go put a large facility in, and you can be right nearby. Haven't really explored if there's any opportunities to grab any space that might be serving that Amazon distribution facility, but that could be a really interesting strategy for the next developers to kind of create a symbiotic relationship for anyone who might be serving that Amazon distribution facility to have some space nearby. If you do want more information on this project, if you're watching us here live on LinkedIn, we have dropped the link to this project there as well as over on YouTube. Make sure to reach out to Nathan and myself for the full offering memorandum. More information is on and available to you after signing the CA in that link. Much more information. Everything that you're going to need to evaluate this project is readily available and is there for you. And I think that is a huge component here on this project, is to say, like, 6 months to 9 months of work is packaged up, ready for you to come in and do this project, which we're very excited about. Now, one of the questions that continues to come in, Nathan, is where is the demand for flex and industrial real estate coming from? So what we thought we would do is just try to break down and understand the forces driving America's industrial real estate boom, right? So the first thing is onshoring is real. And we have talked about this at length on this show. But it was kind of a once theoretical trend, has now become a foundational economic shift, which is onshoring and nearshoring, which is transforming the North American industrial landscape. Let's not forget that you can get to 80% of the continental United States from Kansas City, from this site, from anywhere in Kansas City in a 2-day truck drive. So manufacturers have been shaken by global supply chain vulnerabilities, which were exposed during the COVID-19 pandemic and facing continued increasing geopolitical uncertainty. They're bringing production back to the United States and Mexico in record numbers. And look at this supporting data. Over 90% of North American manufacturers have reshored or adjusted sourcing in the past 5 years. That is a huge trend to be capitalizing on, right? That's a scale. I mean, that's just scalability is unbelievable. Roughly half of them have relocated 20% or more of their operations, right? On the investment volume standpoint, there's been $530 billion in pledged private investment into the United States manufacturing by 2030. All right. And then major government policy initiatives. Think about the CHIPS Act. They're incentivizing production, especially in semiconductors and EV batteries. We have been the beneficiary of that in the Kansas City metro area over in, DeSoto, Kansas, with Panasonic's $4 billion plant, which I just saw they are starting to open up for business, which is very exciting. So, I mean, this reshoring movement isn't just buzz. I mean, it's backed by capital, policy, and corporate strategy. So, Nathan, maybe just connect all of that onshoring and reshoring in regards to how that affects and or is a demand driver for the space in the small bay industrial sector.
Yeah, so I mean, as you mentioned, as manufacturing starts to come back, you're going to see supplementary types of businesses that come to support those type of industries. And I was actually smiling because I actually have a tour this week for one of the flex buildings that we're leasing up, and they are a mobile EV battery charging company. So they literally just pull up, and then if you've been on the road with your EV and you weren't able to charge it, they will literally pull up to you and they have a charger that you can plug into.
Wow.
So that's just literally showcasing the different tenants that can go into these different flex spaces.
Absolutely. Well, moving on. Look, manufacturing spaces demand is soaring. Okay. So from 2022 to 2030, over 270 million square feet of new manufacturing facilities are expected to be delivered. And that demand is paired with an anticipated 1 billion square feet of new logistics and warehousing space to support those operations. Now, what we are talking about here is allowing you to go next to and co-locate next to these large facilities, because these large facilities, they also need support. They need support from contractors. They need support from vendors. And if you can have space nearby these massive, large industrial buildings, logistics buildings, that is a beneficiary. And where is the Riverbend Garage project located? It is in Bonner Springs Industrial Park next to an Amazon distribution warehousing facility. So we have basically procured you a great site based off of the data that we have been seeing from a national standpoint. And it's a trend that you can come and capitalize on here in the Kansas City. Now, one thing I think is really interesting, the construction trends. You know, while demand is expanding, the supply side of the equation is still facing constraints. I mean, new construction starts for industrial and flex have dropped nearly 50% since their post-pandemic peak. All right, so that creates a market tightening. Nathan mentioned the industrial occupancy rates soaring and vacancy dropping, right? The slowdown in development is leading to tightening availability. Vacancy around the country sitting around 7%. If we were to subsegment that out in the small bay industrial and flex space, that is closer to like 2%, which just basically means it's fully occupied. And when people move out, it's about a month to get it back up and leased and somebody else to move back in, right? And then lease rates for modern tech-enabled industrial facilities, they're holding strong. And in many submarkets, they're rising. So developers who can deliver this functional, adaptable product in the next 24 months, they are positioned to ride this wave of pent-up demand, which we're very excited about for this project, right? Now, this is something that you should evaluate as a developer here, right? Tech-enabled innovation is reshaping asset value. We're talking about an efficient build here in regards to the Riverbend Garage project. If you are in the market for what maybe even Nathan was just talking about, which is mobile EV charging, and you need to have some unique setups or some interesting tech, or you're a company looking for 48,000 square feet of building and or more, you have the optionality to make these types of changes as you're developing this site, right? This is your land, your development. What's been designed is approved. But if you want to come in and create automation or technology or have a hub there, that is not out of the question here. And that's another trend, a high value trend that you can kind of tackle, right? And so there's been a lot of investor confidence in this space. And I think this is important as we think about exit strategies, right? So if you are able to get this developed, to get it leased up, to have a nice, strong operating property, there is going to be investor confidence, and it's remaining at all-time highs for this product type, right? So the capital is flowing here. So as you think about your exit strategy, you absolutely have multiple buyers that would be interested in this. You have REITs. You have companies that are trying to build these types of portfolios and build their own REITs. You have 1031 exchange, investors that like to have stuff that is stabilized. So the asset appetite remains high for these core plus industrial assets, and in this case, brand new industrial asset, because it especially when they're located close to logistics corridors and metros with workforce availability, which Bonner Springs definitely has that. Now, this is probably the most important slide that we'll show you today in regards to the trends really in the tailwinds pushing this asset class forward. So check this out, all about the jobs. From 2010 to 2015, the yearly jobs reshored were about 11,000 jobs per year, right? So that's pretty low participation. From 2020 to 2022, we jumped to 300,000 jobs that were reshored. And that's 90% of manufacturers that are participating in that. In 2023, that demand and that trend continued with 287,000 jobs reshored. So that was sustained momentum. 2024 and projected on, the best resources that we can find say over 350,000 jobs will be reshored into North America. And that is a big trend for you to capitalize on. So that's ongoing. That's even excluding the EV and chip sectors, right? So that's just manufacturing. So cumulatively, nearly 2 million jobs have been brought back through reshoring and foreign direct investment since 2010. That's the reshoring initiative. 2023 alone saw 287,000 jobs announced, making it the strongest year ever, and projections will continue to be above 300,000 jobs per year, man. That is a huge tailwind as you're thinking about investing and developing this type of product type. So I think that does a really good job of really kind of breaking down where is the demand coming from for this product type. Nathan, before I move on to the slew of questions that we've got coming in, do you have any questions or do you have any more comments in regards to just the demand side of things that we're seeing in the marketplace?
I mean, not really. I felt like we talked high level and went into detail about like why the demand is there, and what developers can actually do about it at this point. I mean, 50% of the development from 2020. I mean, we have 50% less developments happening than this time a few years ago, and even a few years ago, there was a huge supply-demand gap in the market, and that just showcased that we're going to have an even larger gap going forward.
Yeah. Absolutely, guys. The flex and industrial sectors are no longer riding on cyclical demand. We just showcased that. They're at the center of a structural transformation in how and where products are made, stored, and shipped. From the clean energy facilities to 3PL hubs to small bay industrial, the need for well-located, agile, tech-capable space has never been higher. I mean, I think this is really a historic opportunity for commercial real estate developers and investors and professionals. I mean, onshoring is driving real scalable and sustainable demand, and flex industrial is at the tip of the spear. So just be aware of that, and the data supports it. If you would like this report specifically, head over to my LinkedIn, find my last post. I have it linked there, and we will drop this into, if you're on our email list, when we send out this project, it'll be available for you to review in that as well. Okay, let's get over to some questions, Nathan. Nice job, man, getting through that. That was a great presentation. Let me get over to some questions here for us so that we can start knocking these out. All right, so as I kind of go through them, thank you all for sending these questions. I'm going to put them up on the screen here just so everybody has what we're covering. So first question is about the development itself. Okay, so I'm gonna pop this up, show this. What exactly does shovel ready mean in this case? Is construction fully permitted? What do I need to do? Let's talk through that, Nathan.
Yeah, I mean, it means that it's shovel ready. So from the day one that you acquire the parcel, you're able to start building. Primarily because we already have those plans have been approved by the city. Now, if you did want to go through and make some site plan changes, then obviously that's going to have to kind of go back through that city process. But if you were to go with the plans that we have already gotten approved through the city, I mean, you can literally start digging right as soon as you close.
Yeah, that's a good point, because another question that came in was how long would it take to break ground and go vertical? Look, practically speaking, I mean, I think you can probably break ground and go vertical within 30 to 60 days of closing. You know, all your civil work, the plans to complete, that should allow for pretty quick mobilization here on this project. Again, that comes with the sale of the property. Yeah. Can the additional, go ahead, Nathan.
Yeah, and I was going to say, this is unlike most land development plays, because most people are selling just the land, and then you have to come in and do the entitlement. You have to go in and kind of have those upfront soft costs when working with an architect in order to get the plan approved by the city. Most of the time when you're buying land, it's zoned for agricultural use, which means you have to go through that rezoning process, and that takes months right there.
Absolutely. Yeah. You know, what's included in the asking price? I think we've covered this. You might have missed this on the earlier on the presentation, but it includes the fully entitled land, the civil plans, the pre-design architectural design work, the drawings, the engineering work, all the work that's been done in regards to utility connections, and you're getting all of those soft costs that have already been spent, right? Essentially, you know, you're going to be buying a turnkey development ready package for you to kind of get started in the next 30 to 60 days. Nathan, this was a good question here. Let me get this up on the screen here. So what kind of construction quality or materials are being used for the units? Yeah, that's a good one. So let's go through kind of what is being utilized on the exteriors, the facades, and what did the build outs actually look like?
Yeah. So obviously there were different components of materials that were being used. Obviously metal is going to be one of them. We did have some brickwork or some stonework on some of them, some natural wood, just adding really to that aesthetic appeal of the facade. And really, it's a wide variety of different types of materials that you can use, but that is what has been approved with the city for that use.
Yeah, and on the interior side, guys, we're talking about concrete, you know, floors. We're talking about just a build that is really efficient build for them. They can come in and utilize a mini split if they so choose to, climate control their units. And I think the developer should be thinking about how to market that correctly. Again, Nathan and I can support in those efforts, especially on the pre-leasing strategy and side of things.
And if they wanted to come in and build out a couple private offices, that's something that a lot of tenants end up doing as well.
Yeah, absolutely. Here's another great question. This is more on the financial side of things. So can we walk us through the projected 26% levered IRR and 1.95 equity multiple? How conservative are those assumptions? Okay, we've definitely mentioned this multiple times, but in our due diligence section of our listing, you will be able to get access to a really detailed pro forma and a line-by-line breakdown. But, I mean, the IRR and equity multiple, they're based off of and you know, about an 18 or 12 to 18 month lease up strategy. So I think we're being conservative there. It's being modeled off an 8% exit cap rate. I think we're being conservative there. Rents are projected somewhere around 13 to 13.50, which I think is at or below current comps in the ones that we've been looking at. And so I think those are all pretty conservative assumptions with room for upside through rental growth and future phase development, as well as the parking income that you can have on the project as well. So again, pro forma, all available for you to evaluate there on our listing. What kind of financing are we assuming in the model? Look, the underwriting assumes about 70% loan to cost, financing at a 7.5% rate, which I think aligns pretty closely with typical construction debt terms today. In regards to the pricing of the project, yes, I mean when we were pricing this project out, was right when the tariffs talk was going on. And so there was an increase on the tariffs, the steel that was coming into the project. So we need to go get that repriced. I think that pricing has definitely stabilized since then, but that was a day by day kind of process that we were going through with this group that was working on the project. But hard costs, construction costs, right around $84 per square foot. Again, that's detailed in the pro forma for you to look at as well. Okay. So how sensitive is the model to cap rate fluctuations at exit? Well, I mean, I think that's a great question. I'll let Nathan kind of talk about that. But my opinion on that front is that we have not seen a new industrial product trade at an 8% cap rate. And so being conservative on that front allows you to look at that. I mean, a 50 basis point cap rate shift would materially affect your returns. So, I mean, for instance, from moving, from an 8% to a 7%, that's going to, increase the value by 7 to 10%, or impacting your IRR by 2 to 3 percentage points. That said, I mean, I think there's a basis here and a demand profile that's offering a margin of safety. So we're trying to be conservative in that approach. But if you think that, we can go sell this at 6.5%, 7%, your numbers are going to look a lot better. Our projected exit cap rate or value was right around $6.7 million. And again, that's at an 8% cap rate. So I think that's a big benefit to anybody who's looking at this project. Nathan, anything else to say about that?
No, I mean, you pretty much hit it on the head. I was just going to say, obviously, you all know that there's an inverse relationship between the cap rates and the value of the property. So as that cap rate starts to compress down, that property is worth a lot more.
Absolutely.
So
another great question came in. Who's the ideal target tenant for these units? Look, Nathan and I have done a big, deep research project on this. So we have these segmented out into the different buckets that we can send to you. And it's all on our smart leasing strategy. But think about this. I mean, primary tenants are going to include contractors and service providers, plumbing, HVAC, electrical. You got car enthusiasts. You got small logistics firms potentially. I mean, the space caters to users who need warehouse, storage, and minor office functionality all under one roof. Highway visibility, highway access to the project.
I was going to say property managers, small manufacturers. So it might be a company that's coming in. They've been operating for a few years and they make furniture. It might be coffee tables, things like that. Like it's such a wide variety of different users. And I think that's possibly why they called it flex, right? It's the flexibility of the different tenants that can go in there and how you can actually reconfigure that layout.
Man, another great question. Thank you guys for sending all these questions in. But what's the typical lease term expected for this type of product type, Nathan?
Yeah, I would say with true flex, I mean, you're going to be around 3 to 5 years. With contractor garages, you're generally going to be 1 to 3 years for a lease term.
Yeah, absolutely. And I think that the other thing I will say is, this is another good question that has come in here. Let me copy this over, get this up on the screen. But what's driving demand for flex in Bonner Springs specifically? Look, it's a strategic location off of I-70 with access to K7 and I-435, which is going to help it capture demand overflow from Edwardsville, from Gardner, from KCK. We have high population growth in this area. Very limited small bay product is also fueling major demand. And I think that if you think about this as well, Bonner obviously, offers cheaper land and less competition than places maybe even like Olathe or Shawnee. So and quicker entitlement timelines. Thankfully, you don't have to worry about that. But it sits at the kind of convergence of key freight and contractor corridors, making it ideal for this tenant base. And most new flex garage products are stabilized right now, or they're nearly full, right? And in fact, there's a shortage of this product type, metro wide. Northland projects, Olathe garage projects, they're pretty well occupied, and a lot of times they're waitlisted. I was doing some research on a project in South Kansas City, made some phone calls to some groups that had some spaces marketed for lease, and they said, "Hey, it's about a 6 to 9 month wait list. If you want to put your name down, you can." But you're not going to be probably able to get a space because they're not coming back up. I mean, they're 1 year leases, $12 to $15, and it's just affordable for these folks. I mean, they can absolutely figure out how to make that work, especially if it makes their business run more efficiently. We got some other questions around exit strategies and long-term potential, I think that what we'll do is, if you have more further questions on that, because we're 25 minutes over on our deal spotlight here today. If you have more questions or you are interested, head over to one of the links. Just put your contact information in. Nathan or myself will be in touch. We'll get you access to that due diligence deal room, so you have all of those materials. And if you have questions around the smart leasing strategy, the demand, or you would like to see the report that we covered, what's fueling the demand, not just on a nationwide standpoint, but here in Kansas City, we'd be happy to share that with you. We think this project is just uniquely positioned for someone who can come in and execute quickly. And we're very excited about this project getting out of the ground and getting it developed. Nathan, any last closing thoughts on this project here? Riverbend Flex Garage project, 48,000 square feet, offered at $1,150,000 over in Bonner Springs Industrial Park, sandwiched between Coleman Equipment, Grass Pad, and the Amazon distribution facility. What did we miss?
Yeah, I mean, really, the only thing I will add at the very end is like we're really helping individuals buy, sell, and lease this product type. We're boots on the ground for the most part. I'm out talking to these tenants, just trying to understand when their leases are expiring, and just trying to see what their future real estate plans are looking like. Obviously, people are trying to anticipate how the tariff thing and everything will turn off. So some people are on hold, or some people have leases that will be expiring within the next 6 months to a year. And we're making note of that. So as these developments start to come into fruition, then we have a list of tenants that we're putting these properties in front of, and we're getting these units leased up pretty fast.
Absolutely. Absolutely. Well, thank you all for the questions that you brought today. Hopefully we got to most of them. If we did not, feel free to contact Nathan or myself. Our phone numbers, our emails are here. They're on LinkedIn. They're on the website. You can find us. We'll respond to you. We'll have a conversation about what we're seeing in the market and share any additional information about this project or anything else that we can support you with here in Kansas City. Thank you for tuning in to the 26th episode of the Kansas City Commercial Real Estate Market Pulse. We'll be back here live tomorrow with Heather Ewing, and we are going to talk all things retail real estate, which we're very excited about as well. So bringing on an expert. She's been in the industry for a long time. Very excited. We'll be back here tomorrow live with you all. So make sure to bring your questions for that. Again, here's our contact information for the Riverbend Flex Garage project in Bonner Springs, Kansas. Super stoked about this deal. It's going to be a home run for somebody. Reach out to us to learn more. Thank you for tuning in. Nathan, thank you for all of the information that you brought and for being here today.
Of course.